Hello guys, this is Camila and today I'm gonna help you to solve problem 3.8 from chapter 9. And the problem starts giving us the assets from Crane Company, and it tells us that during the year 2017, each of the assets was removed from service. The machinery was retired on January 1st. The forklift was sold on June 30 for $14,740. And the truck was discarded on December 31st of 2017. So it asks us to journalize all entries required on the above dates, including entries to update depreciation where applicable on disposed assets. And then the company uses a straight line depreciation. All depreciation was up to date as of December 31st, 2017. So we're going to start calculating the depreciation of machinery. And this one is going to be really easy. I'm just going to go through the calculation of the straight line depreciation so that we can know how to calculate it. So here in machinery, we're gonna write down the cost of $86,620 and and we're gonna also calculate the salvage, which in this case is 0, and the depreciable cost. So depreciable cost is the cost of the machinery minus the salvage. Then we take into consideration the useful life, that is 10 years, and we calculate the depreciation, the amount or the value. So to know what is the final depreciation or the annual depreciation, it's going to be the depreciable cost divided by useful life. And the annual depreciation in this case will be $8,662. So for this particular case, it says that the machinery was purchased on 2007, and the year that that this one is being retired is on 2017. So it has already passed the 10 years of useful life for this machinery. So in this case, the only journal entry that we're gonna make is to report the entire accumulated depreciation of the equipment that is going to be equal to the cost of the machinery, because if we multiply the depreciation times the 10 years, it's going to be the same amount as the cost, $86,620. So in the journal entry, we're going to debit accumulated depreciation and credit equipment, because we have to decrease the amount or the value of equipment in our balance sheet. So going to be the same amount, and this is our first journal entry that we need to make for machinery. Now we're going to talk about forklift, the forklift from Crane Company. And it says that the company sells these for $14,640. So first we're going to calculate the depreciation, and we know that the cost is $36,600. The salvage will equal to 0, and the depreciable cost is cost minus salvage, and we also record the useful life. And then we calculate the annual depreciation. That will be the depreciable cost divided by the useful life. So in this case, we have to do two things. So the $7,320 is an annual depreciation, but it tells us that in the middle of the year, in June 30, the forklift was sold. So we have to calculate the depreciation for the first 6 months of 2017 to adjust the depreciation, the accounts used for depreciation of equipment in this case. So what I did right here, that I think it's something that it's easier for me than using the formula that the book gave to us, is to divide the annual depreciation by the 12 months of the year, which gives us $610. And then we multiply that by the 6 months from January to June that the forklift was used in the company. That gives us an amount of $3,660. And that's the first journal entry that we're going to make to record the depreciation expense of the forklift for the 6 months of 2017 that it was used. So we're going to first debit depreciation expense, and it's going to have the amount of $3,660. And then we credited accumulated depreciation equipment, that it's going to be the same amount. But then it tells us that we sell it. So to calculate all the amounts that I need to use for the journal entry right here, I'm going to use this chart that the book gave to us on how to calculate the gain of this or loss on disposal of plant assets. And we have to first record the forklift price. That was $36,000, and the depreciation. So for the total depreciation of all the years that this forklift was used, we have first calculated the 6 months of 2017, but then we also need to calculate the full depreciation of the 3 years in which this forklift was used. And it was used from 2014, where it was purchased, to 2017 as full years. So these are 3 years. And we're going to multiply the annual depreciation times the 3 years in which it was used, which gives me the amount of $21,960. And we are going to write down here the total depreciation of all those years. So we're going to add the full amount of 21,000 plus the depreciation from 2017. After that, we take into consideration the book value at disposal. So what is the book value? It's easy. It is easy. We take the cost of the equipment minus the depreciation of all those years, and this will be the book value. And the proceeds from sale is the value from which it was sold, that is $14,640. Now, to make a judgment of if we have gain or loss on disposal of plant assets, we have to see whether the price of sale is bigger or lower than the book value. In this case, the sale value is greater. It is $14,000 compared to the book value of $10,000. So because of this, we're going to have a gain on disposal on plant assets. So it will be the sale value minus the book value. And it gives us an amount of $3,660. If per se we will have an amount here on proceed sales of, I don't know, 8,000, then we will have a loss of around $2,000 right here, because the sale value is less than the book value. Now, to record all of this information on the journal, first we are going to debit the cash account because we are receiving the amount of $14,640. Then we have the accumulated depreciation of equipment that is going to be the total depreciation of $25,620. After that, we credit the equipment because since we're selling that, the amount of equipment on the balance sheet is going to decrease. So that amount will be the cost of the purchase of the forklift at January 2014 that was $36,600 plus the gain of disposal of the $3,660. And that's to record the sale of forklift. After that, we're going to record the truck. So we're going to make the same process as here. We're going to first adjust the journals for the depreciation of 2017, and then we're going to journalize the accounts for the discarded truck. So the cost of the truck at the beginning was $14,000. Salvage in this case is $3,664. So depreciable cost will be the cost minus salvage, and we also take into account the useful life of 8 years, and we divide depreciable cost by useful life. The useful life, the depreciation, the annual depreciation in this case is $4,636. And we need to calculate that from the year 2012, when this truck was purchased, up to December 31st, 2017, 6 years have passed that Crane Company has been using that truck. So what we're going to do is the depreciation is going to be multiplied by 6. That is the number of years in which it has been used. So it gives us a total of $27,816 right here. Now, we're going to make the first journal entry in which the depreciation for 2017 equals to $4,636, and accumulated depreciation is going to be $4,000, the same amount. And then we record accumulated depreciation of equipment. It's going to be the total depreciation of the 6 years equal, and then that, and then the things that we're going to also journalize here is going to be the loss on disposal of plant assets and equipment. So we're going to credit equipment for the total amount of the truck that is going to be $40,752. And then to calculate the loss on disposal on plant assets is going to equal the 40,000 minus the accumulated depreciation. That is going to give us a total of $12,936. And that's how we calculate all of these. I put these accounts first so that it will be easier and more faster to explain to all of you. If you have any questions, please let me know on the comments and I will answer your questions. And I hope that this was helpful for you. Have a nice day.